All right, let's get more on these earnings moves. Bring in Gene Munster, managing partner at Deepwater Asset Management. Gene, great to see you.
Hello.
Let's kick it off with Alphabet, which is pretty much at after-hour session highs, up about 3% here. What happens? What's happening on the call?
Well, the call's been all about AI, and this would have been the quarter we would have seen a crack in that search. Keep in mind the GPT users went from about 350 million dailies 3 months ago to 500 million. We've just seen this accelerating use of ChatGPT, and that really kind of got the narrative going. I'm very much on board with this idea that search is under attack. And this would have been the quarter we would have seen a crack, and the crack would have been a fractional miss in the search business. Instead, what we saw was search growth actually accelerated. I mean, it was fractional, 11%-ish versus 10%-ish in the March quarter, year over year. And so that was a surprise. They also mentioned on the call that paid clicks were up 4% year over year. And just a really shocking number. If we rewind back to the first part of May when Apple, Eddie Q was talking about this decline in search within Safari, it would be hard for me to have imagined that paid clicks are going to be up 4%. So when I put all this together, Melissa, somebody like myself who's been bearish over the last 6 months, I'm in the camp that this stock is probably going to move meaningfully higher over the next few days, 5-10% higher, in part because we should have seen something this quarter, given everything that's going on. And what the underscores is this, is Google is a habit. It is habitual for 3 billion people daily, 5 billion people monthly. I mean, it is really hard to change that behavior, even if those other products are so compelling like GPT.
So does it put to rest that bear case about the existential threat to search, or does that still linger? You're going to wait for another data point or another data point? It's
going to linger. In part is, so they gave the metrics around how much is in the usage in AI mode. They're at 100 million monthly active users. So that compares to about 5 billion monthly active users for search. They haven't started the monetization. So on the call, they're talking about starting to feather in some more monetization with AI mode. Undoubtedly, they're doing that. But I was listening to Steve's comments. Steve, I was tracking what you were saying about the clicks, and ultimately, just adding monetization to AI mode doesn't necessarily mean that people are going to click on that if they just get their answer. And so I think to answer your question, Melissa, is that there's going to be a relief rally in this, and it may go on for days, it may go on weeks. But this narrative around how does Google navigate AI isn't going to be solved until investors can actually see how they have integrated these sponsored opportunities within AI mode.
Yeah, and Gene, it sounds like the kind of formula for monetization for a lot of these models is going to kind of play out over the next couple of years. It's not going to be over the next couple of months or the next couple of quarters. Just curious, you just mentioned that Eddie Q comment about search on Safari. This was a couple months ago, I think. What would it mean for Google search in general if they lost that exclusivity on Safari? Obviously, we have an installed base of about 1.5 or, I don't know, 1.8 billion users on iOS. Is that something you're starting to model in right now?
And so what does it mean for Google if they lose that?
Yeah.
Or in terms of Google. For Google. So they're paying about $20 billion a year for this. That means they're getting more than $20 billion from this. And so think of this as they probably are getting 30, 40 billion of kind of economic value from that arrangement from Apple. And so that's rarely talked about, like how could Google negatively impact it, because the general thinking is that if they get displaced, then people will just naturally come back because it's so habitual. But there would be a step down. It would be material. We're talking 15, 20% of kind of operating income hit. Search 55% of revenue, 70+% of earnings. It would be a material impact.
Gene, I want to get your quick take on Tesla's quarter ahead of the call.
We talked about earnings operating income down 42% year over year. It was bad, but the reason why the stock hangs in there, they have a chart in their investor deck. They don't give the exact numbers, but you can kind of eyeball it. They added about 1.2 billion miles driven by FSD. That compares to about 600 million in the March quarter. So basically doubled quarter over quarter in terms of those miles driven. That's all plays into the narrative about autonomy is the future. And when you show some of those data points, it's hard to, you can debate how much time investors are going to give them, but it feels like things are really moving. That affordable model, they reiterated their time frame on that, but no one really expected it to be on time. So that was a net positive.